Okay, well, good morning, everyone. I'm Mary Greenon. I'm the Director of Communications for the Hudson Gateway Association of Realtors. And thank you for joining us again for another informative breakfast with benefits. And today we have one of our most, I'll say it, one of our most popular presenters, Sheetal Sawhney from Cross Country Mortgage. And Sheetal is going to be talking to us today about 203K home financing. And without further ado, Sheetal.
Good morning, everyone. So nice to see you all. And thank you for all those who are coming on video. I appreciate it. So this is only 1 hour, guys, and we're going to get started into 203K. I'm so happy you chose to choose this topic, because many realtors don't know about it. So when you learn, you definitely have an edge over the others, your competitors. And also you can also teach your clients. The clients have no idea about this. So it's great to learn and then give them this wonderful option of 203K, okay? My name is Sheetal. I'm obviously an instructor today on 203K, but what I do is I breathe, walk, talk mortgages. I've been doing it for 26 years. I'm very passionate. I love doing what I do. And I'm excited to go over this 203K class with you. Please pay attention, and I'll tell you why, especially on this one. It's a little intense, okay? It's a government rehab loan, yes? Do we know that it's a government rehab loan, right? That's why you signed this class up, right? What are we going to do? We roll the renovation costs into the purchase loan. When someone is buying the house, they're going to add the renovation costs while they apply for the purchase loan. It's a one loan and a one closing. Yes? Everybody with me on that? Say yes. Get off your volume. I like to hear people. Yeah, thumbs up is good.
Yes.
If
Yes.
you have a question.
Yes.
Thank you. That's so much better than me just talking. Thank you for that. I love participation. If you don't mind, ask some questions, unmute, answer them. It's just time is the best way to learn, okay? It's just to interact. So what is 203K? I'm going to give you a little story about what it is all about, right? 203K is just like an FHA loan. The government rolled out the FHA loan and 203K loan. It's a government insured loan, guys. Internalize it. So write it down somewhere, put it in your notes on the cell phone that you can refer to later. It's a government insured loan, both of these products. FHA allows you to buy a house 3.5% down, right? So does 203K. The main difference between the two is 203K is when you have to borrow money for the renovations. Okay? Not FHA. FHA is a straight purchase loan. 203K is, but the guidelines are the same, and which I want to go over really quick with you. Okay? So property eligibility. Let's talk about that. So what properties qualify for a 203K loan and a FHA loan? It's a question for you. Somebody answer.
Single family, multifamily, condominiums.
Okay.
You're breaking up.
Thank you. It's a residential property, 1 to 4 family house. That's a definition of residential, everyone, okay? 1 to 4 family house. Condos, yes. Some condos, which are approved by HUD. I'll go over that with you later. No co-ops, okay? And does it have to be owner occupied, yes or no?
No.
Yes.
100% yes, guys.
Yes.
Right? 3.5% down, it's not for investors. Clearly, you have to live in it. Now comes my other question. How long do you have to live in it? When you say owner occupied, you're getting this amazing loan, government loan, 3.5 down. So easy to qualify, which I will prove to you in this class, right? So
2 years?
question.
2 years.
Terry
1
said
year.
3 years. Who else?
No,
1
2.
year. 1.
Someone said 1 year?
1 year.
Okay, it's 1 year.
Oh.
How cool is that? So can I just present a nice compliant scenario with you? You are your client. You buy your first home. You put 3.5 down. You want to take money from the government as well to fix it up the way you like it. Hopefully you have some appreciation in there because you were very smart about this whole project. Now you have to only live in it for 1 year. And after that, you can rent this whole property and move on to another one. Excuse me, wow. Only in America, guys. This is crazy. It's crazy good, okay, if done right. So you can actually just get it's almost like getting an investment property for your future, but you're buying it as primary resident, you live for 1 year, now you go buy another one, and you keep this as your retirement, and you accumulate wealth. I teach a lot of my clients how to accumulate wealth with real estate. Would you all agree we can accumulate wealth with real estate? Please, everyone say yes.
Yes, absolutely.
Right? I say that all the time to my clients.
Yes.
And I have now clients, kids that come to me and say, hey, listen, my parents, you help them buy this house and they have so much money. I want to do the same. I just don't want to buy one. I want to buy, can you strategize with me? And we all should be able to do that with our clients because it's fun. It's fun to witness all this wonderful accumulation of wealth, right? So you teach them how to do it. First house, you can get a regular 2 or 3K loan, FHA loan, 3.5 down, get a multi-unit. After a year, you rent it out whenever you have the next opportunity. Now get a 1-family house. So my question to you all is, when they buy a 1-family house, after that 1 year, whenever, how much down payment do they need to put?
Maybe none.
3%.
3.5.
Okay, guys, so be with me, okay? Because we're going to all learn the one right answer. You got a 3.5 FHA or 2 or 3K loan, 2-family. You live in it for a year. Now you say, hey, I want to upgrade. I want my 1-family. I want to rent this out, keep it as my retirement plan, and I want to go and live in my 1-family house. The minimum down payment is 5%, conventional. Just remember that. Because you can teach this to your clients. Simple and easy. Okay? So, everybody can see my screen, yes?
I'm
Yes,
sorry,
okay,
can you, a quick question, if you have a multifamily, do you have to put in 20% or 3.5%?
3.5% down for a 1, 2, 3, or 4-family house. Owner occupied, you're going to live in it, primary residence. What do you need to qualify for this loan, guys? Let's go over it. What does a client need? When I'm working with a family to pre-approve a client, what am I looking at? I'm looking at 3 things. Let's cover all the 3 for 2 or 3K, okay? Number 1, we're going to check credit, right? So let's talk about the credit score. What's the minimum credit score for a 2 or 3K loan?
580.
Yeah. You know what it is? That's a right answer, but now the banks are getting a little bit stricter for 2 or 3K and changing it to 600.
850.
So it's coming to be around 600 score. They're changing a little bit for 2 or 3K. For an FHA loan, it's 580, but for 2 or 3K, they're getting a little bit more strict. Okay, second question. Okay. Income. This is a full doc government insured loan. There is no such thing called no doc. Realtors, 1099s, all of you. Self-employed people, 1099, contractors, realtors, drivers, owner-operators, and many more, consultants. You want a 2 or 3K loan, there's got to be some income there. And income means your adjusted gross income. If you have a 1099, it's the income after your expenses, average of that for 2 years average, okay? Why do I specify 1099s? Because for all of you, you guys are 1099s, right? You should know that too. And for your clients. So basically, it's a full doc loan. That's it. Okay? Now, assets, 3.5% down, right? Plus closing costs. No reserves are required for a 1 and 2 family. For a 3 and 4 family, you need 3 months of reserves only, which is not bad. 3 and 4 family houses have a self-sufficiency test that they have to pass. It's a little complicated, guys. I need the property price, taxes, and the market rents for each of the units to tell you whether it qualifies or not. Basically, what we're looking for is that the property rents is way enough to cover the mortgage. 75% of all the market rents has to not exceed the mortgage payment. Okay, it's a little test. Don't pay so much attention. That's our job. Okay, but if you're working with a 3 and 4 family client, I want you to know this. Don't want to waste your time. Do not waste your time. It's frustrating. A lot of deals die because it's not done correctly. And realtors then, because they end up wasting so much time showing properties that don't qualify. Okay. Question for you, as far as credit is concerned, if somebody had a bankruptcy, and this is again, it's like a little revision of FHA and 203K because it's similar, but I want you all to know, I teach that in my FHA class. So we're going to revise, do a little revision for those of you who attended that. If a client had a Chapter 7 bankruptcy, can they get a 203K loan, and after how many years from the date of discharge? After how many years from the date of discharge can they get a 203K loan, guys? Chapter 7 bankruptcy.
7.
7 years?
2 years, Chantal.
2 years, right? He's attending my class. That's why he's answering all these questions.
Mm.
2 years. It is 2 years. So everybody learn it. Your clients don't know this. Just as you thought it's 7, they think it's 7. Please connect with bankruptcy attorneys. You can get business from them. They don't know either. 7 years is not the right answer. It's 2 years. Conventional loans is 4 years. FHA is 2 years without any property involved. If they did not have a property in the bankruptcy, it's 2 years. What about foreclosure? Client did a foreclosure. After how many years can they get a 203K loan or an FHA loan? 3 years, guys. So between 2 and 3 years, you can get a government loan, which is FHA or 203K. Okay? Just remember, like 2 to 3 years, you're done, which is nothing. Yes? Okay. So now that we covered, yes, it's a full doc loan. You have to qualify with your income, 3.5 down. The entire down payment can be a gift from a family member. Okay. The maximum seller concession that is allowed is up to 6%. No reserves for 1 and 2 family, 3 months reserves for 3 and 4 family. Okay, that's a little recap. Okay. So let's go over this really quick. It allows borrowers to roll renovation costs into their mortgage, 1 loan with 1 closing. Amount borrowed includes the price of the home plus the estimated repairs, including labor and material. Helps to expand home ownership opportunities and support community revitalization. Yes? That is the main reason, right? Like imagine if you have properties that are distressed. And then when you fix it up, it helps the entire community, the entire block, right? Now, let's talk about, there are buyer's agents in this call, there are listing agents in this call. So let me address both of you. When you have a buyer who wants this perfect house, oh, this is not good enough. I want a better kitchen. Oh, I want a finished basement. Oh, I want this and I want that. And the budget does not meet their requirements. Do you guys please say that you meet such people?
Yes.
Right? We all meet clients like that. They're unrealistic. They're not, they want everything and they just don't have the budget for it. So then that's the time you can sit down with them and say, listen, it seems like you don't like any house, like you have a particular requirement. Would you like to get a house that's distressed and then you fix it up the way you want it? You want that kitchen, that perfect kitchen, you're dreaming of it, then you go put it. It's not a simple loan. It's not for everybody. I can refer you to a 203K specialist who's going to go over the entire loan process with you. After that, you decide if it's for you or not for you. So I can help you find a house accordingly. For every 203K client, I insist on at least a Zoom meeting with all the members, decision makers involved. What I don't want is for them to say, I didn't know the process. I wish I knew. Oh, no. We want to educate them right in the beginning stages. So we know the realtor should know whether they should spend their time with distressed homes and take them towards a 2 or 3K or not. Or do they have the appetite for this process? It's an intense loan, not for everybody. Okay. That's for buyers agents, right? If you come across people, then that's a good opportunity to talk about a 2 or 3K loan. Now, if you're a listing agent and you listed a property and it's the condition is terrible. And the location is good, condition is terrible. And now you start educating all your buyers agents, everyone who's showings, your open and say, listen, this is a great opportunity for someone to get a 2 or 3K. It would take X amount to fix it. But if they do this and this, now they have a lot of value. You kind of sell that loan. You educate people. People don't know. Your colleagues don't know. May not know. Yeah?
Chital,
Yes.
Yes.
PMI, does it come attached, included in the mortgage payment with this 2 or 3K loan?
Great question. So his question is there PMI in this mortgage loan? What is the answer, guys? Anybody? What is the answer? Yes or no?
Yes.
Okay. A little
Yes.
refresher on that. The answer is yes. However, a little deeper on it, okay? FHA and 2 or 3K are government insured loans. Everybody internalize that. I'm saying it for the third or fourth time. Why am I saying it so much? Is because I want you to know, even if a client puts 30% down, they're still going to pay the monthly PMI. That's why it's not the best loan for somebody who wants to put more than 20%. Okay? It's not. Then I don't want them to pay PMI. I want to look for another option for them, right? They always will pay PMI. It's a government insured loan. The government rolled out these loans. What they said is, we're going to encourage home ownership and we're going to roll out this FHA and 2 or 3K to make it easy for clients to qualify. They don't need a great credit score. My debt to income ratios can be high, right? So it's easy to qualify. However, because they take the risk of giving clients this mortgage who have not so high credit scores, they protect themselves by charging a PMI for any future defaults that may happen. Did I go too fast? Did everybody understand what I said?
I have a question. They charge PMI even if you're paying more than 20%?
Always. You can put 70% down, you'll be paying PMI. How about that? Or any amount down.
Got it.
When did that change?
It's always been like that from day one. Always been like that.
Is PMI for the entire term of the loan?
No, Juanita, not really. So what happens is, as I go on, I'm going to cover this more, but listen, since you asked this question, her question is PMI for the entire, for how many years do you have to pay PMI, right? So the accurate answer is, if you put less than 10% down, you will pay PMI always till you refinance it. If you put more than 10% down, PMI stays for 11 years. And up until you have that 20% equity. Okay? In a 2 or 3K, guys, I've done many 2 or 3K loans. Now, what happens is, many a times, the value of the home goes up once you finish that entire project. Now, the interest rates are higher on a 2 or 3K. So when you're done with everything and the value hopefully has increased, we always refinance and try to get a conventional taking off PMI totally now. It's always the plan.
All right, I have a question. It's slightly unclear to me. Is the PMI only on the portion that is the 2 or 3K, or is it on the whole loan?
Okay, so Rosia, right, Rosia? Her question is, is the PMI charged on the purchase money or on the renovation money or on the entire loan? So the answer is, it's a one loan. There are no two loans. Okay. And I'm going to go over the story with you. It's purchase money. You add the renovation costs, becomes one loan. You pay PMI on the entire one loan. One loan, one closing.
So, but I was always under the impression once the loan balance, once you get to the LTV at 80%, then the PMI go away, but that's not the case.
It does not disappear. And
Mhm.
that's for a conventional, not a FHA or 203K.
Okay.
Guys,
like-
a conventional, not everybody qualifies for a conventional.
Okay.
Did I tell you about the bankruptcy? Did I tell you about the credit scores? Did I tell you a lot of things? Conventional.
Yes.
If you have a client that falls into that, conventional is much stricter, right? So as a lender, what is our job as a lender? Once we know about the income, credit, and assets of our clients, we know which program to put them in, which will get them the best deal, but will also close.
Gotcha.
Okay, now, please allow me to go over a little story on a 203K loan. Let me go step by step the process of a 203K loan, and then I will take some questions. But I want to just go over the story. Is that okay?
Yes.
Yes.
For simple math, let's say your client wants to buy a distressed home for $300,000. And it requires, what is the first step that we're going to do? Your client likes a house, it's distressed, it needs repairs. So the very first step is that you're going to get a licensed contractor to go to the property and give us the estimates and the details of repairs. Meeting of the minds. What does the buyer want to do in the house? Contractor, how much is he going to charge? What are the details of what has to be done, what the buyer wants, right? And how much is the estimates for that? The contractor has to be licensed. We also need to make sure it has enough liability insurance, at least $1 million. Insurance is in case somebody falls and gets hurt while doing the repairs, there's enough coverage. There's enough insurance. Okay? Now, let's assume the price is 300. Now, the estimates that I get from the contractor is 100,000. So we're going to take 300, we're going to add the 100,000 plus some extra 2 or 3K fees that get it. For example, did you know that when I get the estimate of 100,000, I have to add 15% extra to that as contingents, as a contingency? Why is that? It's required, by the way. It's not my rule, it's HUD rule. Why is that? Is, let's say the contractor said 100,000, right? Estimates. But then after we close and the repair start, they broke a wall and another something happened. What if they exceed in the process? Extra money is required. So 15% is what we are required to add to the estimate, just in case we need it. If we don't need it, we'll reduce the amount in the end. But it's there. If something else should happen while this property is being fixed, something else breaks. Fair enough?
Yes, is that 15% per estimate or total? I mean, I guess it doesn't matter.
It's the total of all the renovation costs.
Can you add an estimate later or all of that has to come in at the same time?
Oh, no, later, Verona. Absolutely not. I'm pre-approving the clients based on all of this stuff, numbers. We're not
Got
gonna
it.
do it accurately. We need to make sure we close. And the buyer qualifies for all this. It's a requirement.
Okay,
There's no ifs and buts in this. Yeah. So
okay.
now, so let's
I
keep the
thought so. I just had a weird scenario that happened. So I thought so. And you
Yeah.
clarified it. Thank you.
Of course, 300 is the price, 100,000 plus the extras. Let's just assume it's 400 in total for simple math. 3.5% is the down, which is 14,000 only. And that's our loan, right? So the first step, we got the estimates from the contractor. Now our client qualifies. It's not a problem. I give you the letter, pre-approval letter. You make the offer, right? You're going to write in the contract, hey, this is a 2 or 3K loan. The buyer is borrowing 100,000 for the repairs of the house. the loan amount is going to be way more than the purchase price. So we're going to put that in the comments. Right?
Mm-hmm.
What is the second step? I start the loan. Now I take that mortgage application. Okay? The contractor, I want to make sure that the contractor understands this. We should have ideally 2 contractors. Let's get 2. Once the deal is sealed, we want to get a backup. What if they ever fight in the middle of this process? It's happened. It's happened like more than once. Let's keep a backup. It's like doing a surgery on a house. Okay? After I start the application, I will order something called a 203K write-up from a HUD consultant, a 203K HUD consultant. I know somebody for years. That is they're approved 203K HUD consultants. This is a mandatory step. It's not something that I wish to do. We have to do it. This person will go to the property, will look at the estimates of the repairs, go to the property and confirm in his report that everything that we're doing is enough to get a CO. After we do all those repairs, we will get a CO, number 1. Number 2, we meet all the city codes and the guidelines and what's required with that city. Okay? Sometimes he will come back and say, hey, listen, you guys forgot a smoke detector here. You forgot a handrail here. You forgot this. Add it to your repairs, and we will. We will add it and send it to the contractor. We need the contractor signature. We need to redo that. We need his blessings. Once I get the 203K write-up, now I have the estimates from the contractor, step 1. Step 2, and now I have the HUD consultant write-up. It's a go now. I'm going to order the appraisal and provide both these reports to the appraisal company. Did you know that the appraiser has to give me 2 values? As is value, just the way it is in that condition, and after repair value. Both are important. I need both. Now I got the appraisal.
Excuse me, can you repeat the appraisal? You mentioned 2. Can you repeat the other one?
Yeah,
Actual
one is,
repair
of
value,
course,
and the
of
other
course.
one is
One is as is, just the way the property is, without any repairs, as is condition, the way it is. One is after they finish the repairs, what would be the new value? Future value after all the repairs are done. You got it?
I'm sorry, can you repeat the first time? It's an actual repair value and the other one is?
No, one is as is, like the valuation of the property, the way it is before the
Got
repair
it.
started.
Assets. Okay, thank you.
Before repair, after repair value. Okay.
Thank you.
Anytime. So now
Do
we
they-
got
Do they give a
appraisal.
time frame to do that? Is that the repairs have to be done within
Let
a
me
year?
finish. Let me finish. Hold your questions, but don't forget your questions. I want to answer each one. Let me just finish. So I just want to finish the story. So then we have, but I love all your questions, guys. Thank you. So now we got the appraisal report. So now we have the estimates. We got the HUD report. Now we got the appraisal report. Now I'm going to submit it to underwriting for a commitment. The most important person in this whole 203K is who, guys?
The underwriter.
The contractor. You have no idea that if we have a good contractor, this becomes a beautiful experience. If we have a bad contractor who does not return our calls, does not sign the revised documents, oh my God, it's hell. The most important is the contractor. Okay. Once the underwriter commits the loan, we ask for documents. There's a lot of back and forth. It's really a lot. It's not an easy loan. I'm not scaring you. I want you to know it's not for everybody. It's a very intense process. It can be frustrating for clients because there's extra steps. There's quite a lot going on in normal mortgages, but this one is double. Okay, because of the third parties, too many third parties, not us, third parties. Okay. Now we got a commitment. We got all the conditions. We closed the loan. That 300,000, which is the actual sales price, the sales price is what the seller wants, right? What we're giving the seller. So that 300 goes to the seller. You guys get your commissions. You're out. You go and find another buyer and you continue with your other deals. Now we're going to keep that 100,000 plus that repair amount. We have a department, 2 or 3K. We keep that. We work with the client and the contract. Now it's part 2 that we take over. Now you're done. You did your part. So now the contractor, everyone, has to go and do the repairs, the first phase of the repairs with his own money. So the contractor better have money. We will check that before we appoint this guy. He better have money to do the phase 1. Why does the contractor have to? We have the money, right? Why we ask the contractor to come up with his own money? Why is that, guys?
They have to have skin in the game.
What is skin in the game? You know what? You give contractor $15,000 and say, hey, Mr. Contractor, here, take the money, start the repairs, and the next thing they disappear and they run away. What are we going to do?
It's to keep him honest because the amount that he quoted is the cost of the repairs. He's going to get paid that amount. So he needs to make the repairs so that he can get paid. Otherwise, he could say it's $100,000 worth of repairs and it only be $20,000.
So I'll tell you what happens, right? Imagine we give 20,000 to the guy and say, go do your first phase of repairs, and he runs away. This is the client's money. It's the client's money. It's their money. We're protecting them. Also, now, when they do the first phase of repairs, contractors love 2 or 3Ks. Why? Because the bank is sitting on the money and can't wait to finish. We want to pay the contractor. You do your job, take the money. Do the second phase, take the money. We want to finish this off. We're not in the business to prolong 2 or 3K. We want to close our books. Okay. So contractor does, we send an inspector to check. If the contractor will send us a bill and say, listen, I spent 15,000, give me the check now. We send an inspector who will confirm that, yes, he did that 15,000. He did put in the money. We write the check. Now the check is written in 2 names, the buyer's name, our client, and the contractor. Because it's a client's money. The client closed. It's their money that we're holding. The client has to endorse the check to the contractor every time. It's their money. And it's a good thing because the contractor better keep that client happy and do what he said he was going to do, right? Little accountability.
Question.
So now after we issue the first check, then we go to phase 2. The phase 2, now the contractor is going to do the second phase. Again, we send an inspector. He's going to send us a bill. How much was it? Okay, yes, he spent it. We release the check. Until the process is done. After the entire process is done, we will send the inspector for a final inspection. Once that is done, everything is signed off and okay, then we will close our 2 or 3K accounts with whatever. Remember, we took that 15% extra funds, we borrowed it. Maybe we didn't use all that 15%. We'll reduce the loan amount and then make it a regular loan. We will also do a title update at that time. Why? Why are we going to check a title again? We checked it before. Just to make sure that during the repair process, there's no liens. Because we're finally closing the books and we need to ensure that no liens have occurred on this property during the process while it was being repaired. No contractor liens or any other liens. Yes?
Mechanic
Then we
liens.
close our books and make it a regular loan. Couple of things I want you to know. HUD likes this 2 or 3K process ideally to be within 6 months. I've had cases, it went beyond. Stuff happened. The contractor was terrible. We had to change contractors in the middle of the project. It was a nightmare. But we already closed, guys. We have skin in the game. It's too late we're always trying to, like, we'll always find a solution. But I'm giving you ideally it's 6 months. Okay? If it takes longer, we're stuck. We're gonna still try to do the best we can to wrap it up fast. The minimum that you can borrow in a 2 or 3K is 5,000. But you know what? It's not worth it. Like, the value of 2 or 3K happens when you borrow more, because just for 5,000 to get a higher rate on the entire loan, to go through the fees, it may not be like, you know, you're spending a lot just for 5,000. Just take a credit card and do it sometimes, right? But it's great when you do a bigger project. The value is more because of the cost factor.
How much higher is the interest rate on these loans?
Good question. It's, I would say, 1/4 to 0.5% higher than the norm. And there's also some additional 2 or 3K fees, because your HUD consultant is going to charge a fee. Could be 1,000 to 2,000 depending on the scope of the work. But I always tell my client, he has your back. He's like a consultant. Couple of thousand to pay for an experienced consultant is nothing. You're doing a big project. He'll make sure that we're compliant. We need his blessings. It's a small fee to pay for something of value. Now they're okay to pay. Now they don't mind. They see the value because I just educated them. Okay?
Question. Are there any fees for the inspections for each draw?
Yes, approximately 200 per inspection, which is all added to the 2 or 3K repair amount. We added,
so it's
there's a
coming
whole
out of
2
the-
or
out of the
3K
repair money.
worksheet we do. We add any permit fees, any architectural fees that sometimes the projects are really big, guys. There are architects involved, permits involved, lots of inspections involved. So we will take an estimate of how many inspections we can add. We'll add it. We don't want to be we don't want to under borrow. We want to make sure the borrower has money to do this project, right? You're doing a surgery. We want to make sure we do we want a good end result.
So all these
Right?
fees are all enrolled into the
In the 2 or 3K
2 or 3.
repair amount. That's right.
Okay, so it's not
That's
coming
right.
out of pocket.
No,
Okay. Thank you.
most welcome. I want you all to think about something. And I come across this, right? Because I'm a finance girl. Sometimes, I meet clients, right? Like, they're buying properties and they don't have a lot of money. They're putting that 3 and 3.5% down, and they can just about make it for that down payment and the closing costs. They don't have a lot of reserves. They go buy this property, right? And now, inspection, waiving inspection. We're in an interesting market where they'll just waive everything to get a property. But let's say they buy the property, and after they buy it, the boiler.
I'm on a Zoom call. I'll be off in a minute. okay?
Hey, somebody.
And you can.
Okay, let me just mute her.
Whatever you want to.
I don't know how to mute her. Can you mute her? I don't know how to mute. Hey, Juanita, can you
Yes.
mute yourself?
I will, I just muted somebody.
Oh, thank you. Okay, so now this client bought a house, has no money because they put all their money in the down payment and closing, and now the boiler burst. Something happened to the property, and now they're stuck. That's not a very good situation to be in, guys. So if the property requires repairs and we have a borrower that does not have the money, 2 or 3K is a very good option. Okay, because otherwise it can create an issue for our clients and the family that we're serving. 2 things again, pay attention to this. There are 2 types of 2 or 3K. You saw the story I went through, right? There are 2 types of 2 or 3K. One is called a streamline 2 or 3K, where you only borrow up to 35,000 for some small non-structural repairs. For this under 35,000 repairs, you don't need a HUD consultant because it's non-structural. It's something that does not require too much of, it's easy, no architecture needed, simple. Okay. The other one is a standard 2 or 3K, which is more than 35,000. It could be anything. It can be fully structural. We can change. We can do extensions on the property. The property could have had fire, and we can just make the entire property. We can do a lot. Maybe there's a basement that is unfinished, attic unfinished. Maybe the property is not distressed. It's in good condition. It's livable, but our clients wants that fancy kitchen, wants that upgraded version of a house, and we say that's fine. So guys, the property doesn't have to be distressed for us to get a 2 or 3K loan. Okay? Everybody got that?
Yes.
Yeah, because some people say, oh, distressed, oh, 2 or 3K. No, not really. The one thing we have to be very careful on is that you cannot over repair a property. Like we need the after repair value to happen, right? Like if you just you have to look at the comps in the neighborhood, and you don't want to be the most expensive house on that block, right? We need the comps. So you cannot over repair. You have to look at the comps around and then determine that. You guys are realtors. You understand that, right? Okay. While the repairs are being done, if the client has this option of adding the mortgage payments to the loan as well, they can finance the mortgage payments up to 6 months. If it takes 6 months to do the repairs, they can add all the mortgage payments into that 2 or 3K pot. So they don't have to worry about the payments while the property is being fixed. Everybody got that? It's a good option to give a client. I've had clients take advantage of that many times. Yeah. For all of you, I think you should pay attention to listings. A lot of the REOs, Fannie, bank-owned properties, or just some listing agents will put their 2 or 3K or cash offers only. Find out what the issue is. There's a reason that that comment is put there, so that you know how to, give options to your clients, right? Find out what the issue is so we can deal with it. What happens with bank-owned properties, guys? Like Fannie Mae will send us their own contract, but then they say, you're buying it as is, and they won't allow you access to the property to do any repairs. So sometimes the repairs could be just 20,000, 10,000, but the borrower has to take a 2 or 3K loan because they will not allow anybody to do the repairs prior to closing. I did one, it was just like there was mold and asbestos, just we had to do it. No choice. Okay. Those are boarded up, utilities are turned off. Sometimes they'll say they just won't let us do it. All different scenarios.
Can I ask a question?
Of course.
So in terms of the repairs that need to be done, not every contractor can cover everything. So, there are specialists in other things. Can you have multiple contractors?
You can have 2, max 3.
Oh, that's it?
Yeah, that's it. Or then you can have a GC. You can have a general contractor and then he will subcontract many others. But we have that person responsible. We cannot have like a whole party of people. It will be a mess.
Yeah. I mean,
you
but
can have a GC who's now subcontracting it to others. That's fine.
Okay. Okay.
Mm-hmm. That's a good question, though.
I have a question.
I want to, yeah. You know what? Can I go over the PowerPoint and we can continue our questions because we have like, another 10, 15 minutes. Let me just go over it.
Absolutely. It's in the chat too. So it's okay. Thanks.
Okay. So we read this, right? Benefits of a 2 or 3K. Buyers can purchase and make approved improvements after closing, right? Current owners can refinance. Now look at this. Please, everybody, pay attention to this one. I have done many 2 or 3K refinancing. You own your own house, you want to fix it, and you say, okay, let me get a 2 or 3K loan. How cool is that? I've had clients who've done extensions on their homes. We did a 2 or 3K loan. Okay, just so you know, it's not just for purchasing, it's also for refi. May increase property value. Why do we write may? Because we're not allowed to just say, hey, it's going to increase, right? So we have to be protecting ourselves when we write something. But I always tell my clients, guys, if you're going to do the surgery on a house, let's be tactical, let's be strategic, let's find out what we can do to improve the value. We can accumulate some wealth. Hey, if an extra bathroom here will increase the value, then let's do that. Let's connect with the appraiser, right? Like, why not? While we're doing it, let's try to get it higher. Combines the cost of the home and renovations into one loan. We know that already. What you need to know, it can take a long time to close. Even though it says 60, I've had cases that went on for 4-5 months because it was really very extensive. I had one, there were just shells in the house, and we did a 2 or 3 loan. It was really a big project, permits, architecture involved, so much. It was too much. It took way longer. But the point that we're making is this is not a 30-day close. It takes time. Okay. You know, the 2 or 3K was not popular in the pandemic. Who was going to accept 2 or 3K? The prices of supplies kept going up. Contractors prices were going up because they were so busy. We didn't do a lot of 2 or 3Ks. Planned improvements cannot be completed by borrower. No self-help, like the buyer cannot be his own contractor. That's what it means. I've done mortgages for contractors who bought their first home and used it 2 or 3K, but they had to use another contractor, at least on paper. Okay. What they did after, I don't know. But on paper, it looked like they were using another contractor.
Even if they're licensed?
Even if they're licensed. It's not allowed. Yeah. Lender must review and approve contractor's profile, license, and insurance. Of course. Oh my God, we must. That's very important. Find out, do they have the money for the first phase? Do they have enough coverage? Do they have some experience? Like, oh my God, is this just a new guy just trying to give us some very lowball quotes? Is this going to be his first project with us? Oh no. This is very important. Like I said, contractor is the key to a smooth transaction here. No more than 2 contractors normally is enough. During rehab, limit yourself to agreed upon repairs. We are following a roadmap, guys. We got the details of the repairs. Now, don't say that, okay, after we close, oh, I want this also, and I want that. No, if you want that, now use your own money for that. We're going to follow the details that we started with because that's the estimate. That's what we used for this project. Okay. Same thing, inspection has to meet FHA requirements. Of course, we have the HUD consultant who will make sure that we meet all the FHA requirements and the city requirements. And our goal is to get a CO after we finish. Types of 2 or 3K, one is a standard. Standard is more than 35,000 in repairs. Streamline is under, right? Of course, the Streamline is faster because there's no HUD consultant required. It's small little repairs, so it goes really fast. Minimum 5,000, no maximum. Requires HUD consultant involvement. This is standard, right? We went over all of this. Eligible repairs, you can do pretty much anything. It's really a lot can be done. Standard process, guys. I did go over these. You know, you select and apply. We qualify, select a property, hire a contractor, get the bid, right? One is with HUD consultant, one is without. I think you guys have the PowerPoints. I think, Mary, have you given the PowerPoints to everybody? Okay, if not, if you
I
guys don't
haven't.
have it, you can email me and I'll give it to you.
You emailed it to me. I have not sent it out. I was going to wait.
Okay. I mean, if you guys need anything, I also have a flyer that I'll share with you that you can use and refer to.
I was going to send everything at once with the recording and everything, so they'll have
good.
everything in one spot.
Thank you, Mary. That's better. So really, the only 2 differences between the Streamline and the regular is that the one with the standard, you need to have that consultant. But for just up to 35,000, you don't need to have the HUD consultant. That process can be removed. Okay. Property eligibility. So existing property that is completed at least 1 year prior to FHA case number. So this is not for land to construction, like ground zero. No. we need the property to be existing for 1 year. There has to be at least 25% has to be kept of the property's existing structure. Okay, we're not doing a like from zero to, it's not a land to construction, lot to construction loan. It's not. We have to keep the 25% of existing structure. We can renovate the rest. 1 to 4 family, we went over that. FHA approved condos. Let me just take a moment to explain how that works to you. So there is this link. Okay, guys, this is a condo link. Once you put the state and the zip code and you hit enter, it will tell you which condos are approved in that zip code for 203K finance. I'll share this link with you by email. Mary, are you going to give me their list of emails and their names and all that?
Hi, I'm sorry, we are not, our company policy does not allow that, but I will put your contact information in, and if they want to contact you, they
Okay,
will
that's
have
fine.
that.
Sure, sure, sure. Guys, just send me your email if you want me to email these links to you. These are good links to have permanently. You should archive that email because even for an FHA loan, it's good to know which buildings are approved. Simple. State, if you want me to show you, you just put like New York, and if you give me a zip code, can somebody give me a popular zip code?
10552. Try that one.
Sure. Mount Vernon, New York.
Correct.
Okay, this one, there was only one record that shows and it was approved, but it expired and nobody reapplied. So the answer is there's none in the zip code. But you will find, I know, you'll find some in other zip codes, okay?
Can you try another zip code? Can you try one more zip code?
Of course I can. Give me the zip code, please.
10562.
Sure. Both are expired.
Can we try 10023?
Guys, let me send this to you. You can keep trying. I'll send the link to you because I want to go over loan limits. I want everybody, if somebody leaves at 10:30, I don't want them to miss out on other things. So, okay, loan limits. What is the loan limit on a 203K loan on one family? Anybody? This is another link I'm going to email to you. If you send me an email, I'll respond with all these links. So let's say for New York, right? I just want to pinpoint some things to you. All right. Albany, one family is 472 and change. Bronx, 1,089,300. All the high cost areas are 1,089,000. Bronx, Queens, Westchester, a lot of these. You will see Kings, a lot of the counties, okay? It's going to be 1,089,000. 2 families, 1.3, 3 family, 1.6, and 4 families, 2 million. It's quite a lot of money. Okay, I'll send this link to you as well. Okay. All right. So that is that on. I want to share the flyer with you really quick. All right. This is another one that I will send to you that you can share with your clients who have expressed any interest in a 2 or 3K, or you want to educate them about 2 or 3K. So it gives them a little bit of a, like a little summary, little teaser, but which is not enough. Anybody interested, guys? This loan is not.
Can you share your email address, please?
Yes, of course. I have a shorter one. Let me put my email in chat. I'll put it in chat. But let me give you my cell phone number, guys. It's 201. Mary, do you have my contact? Can you put it in chat?
Is it on the bottom
Yes.
of this flyer? 201-951.
6423. Yeah, that's me.
That's
This
it?
one. Yeah.
But
And
I'll
is that your
send it
email?
when I send out the recording. I'll send everything.
Okay.
Is that your correct email?
Yeah, I have a shorter version which I wanted to text to you. I don't know, where's the chat? I have not been looking at chat. Guys, now is the time. Ask me the questions I have not answered. Please
Okay,
ask.
is it the same as a construction loan?
This is a 203K rehab is a government construction loan. In a conventional world, there's a home style that's for conventional, but it's stricter to qualify. The government rolled out program is more lenient, just like the FHA loan is. This is like, it falls under the same guidelines.
Thank you so much.
No, I'm just going to type my email. And also my cell phone. You can just take a picture of that. Oh, I do want to say something.
What are the income restrictions?
Oh, wow, what a lovely question. There's none. Thank you for asking. Zero. You can make so much
Zero.
money and get a 203K. How cool is that?
Oh, wow. Okay.
Yeah, guys,
Yeah.
send me an email or text, okay? I'm not going to respond to your chat messages. Just ask me questions right now or send me a text or email. But really quick, I want to close this with something, which is very important. 203K is a great loan, but it's not for everyone. Believe me when I tell you, it's not for everyone. A lot of realtors use it for themselves and their families because they're confident. They don't fear contractors. They understand this is our product. We are real estate people. It's different. I had a recent conversation with a doctor. She wanted to place an offer, not realizing the process of the 203K. After I went over with her, she was getting doozy and she said, I don't want a 203K loan at all. I have no time. And rightfully, she should not get a 203K. She was getting like sweating just listening to me. She wanted to just have patience. I mean, this is not for everybody, guys. Please understand, everything is not for everybody. That's why I when I told you that I like to educate the family in detail so that they know what the process is. Either they're 100% in or it's not for them. It's fine. What I don't want is realtors to waste their time working 3K properties to people. Why? Let's be fully communicative, no filter. I even want sometimes a realtor to be a part of the Zoom call. Come in, let me educate them. Let's feel them out together. That's what we need to do. Okay, guys. Any other?
It seems like in this. It seems like in this market where things are selling so fast, still doesn't seem like a seller would accept an offer if it was a 203 because of the time restraint.
Yeah, it does take a long time, guys. It does. It does. And that's why when there is a foreclosure and we're doing a 203K loan and the foreclosure says the bank owned property and the bank says, hey, if you don't close in 30 days, we're going to charge you 150 penalty per day. Oh, please, 203K is not for them. I mean, like that's too much. No, you got to have some flexibility if you want to accept a 203K offer. You see? Yeah.
So do you think getting the pre-approval with you if you identify a property ahead of time before making the offer is the best route to go?
What did you say? Could you repeat it? I'm sorry.
I'm saying to identify a property and get a pre-approval through you for 203K before making the offer is the best route to go?
Yes, because we don't know how much the repair costs are, right? So how do I pre-approve a client? Like what we don't want is to waste time. Unless you have somebody giving you an estimate or you have we need to have some numbers in place before. We want to make sure the client's fully approved, understands the process. Once we have these two pieces, let's go make the offer. Because I understand time is of the essence. We cannot hold offers back because sometimes we miss the boat.
Right.
Like we can't take too long. So we need to have that sensibility and work as a team together.
So at what point is the contract signed and the deposit given down?
At what point? No, as soon as you get the estimates, the client is qualified, you immediately make that offer, you take the deposit just like you would in any other loan.
Yes or no?
Any other question?
Yes. I'm not understanding how.
Because I do want to know how much
Oh.
he's gonna charge me, because I don't want him
Can I ask-
coming here and
can we
then I
mute
don't have money to
Rosia?
pay him.
Mute,
So
mute.
we need to talk about it.
Okay, yes. What was your question?
How would you pre-approve somebody if you don't even have a subject house yet? I'm a little confused by that.
Question, Terry. Look, let's say I pre-approved it. I'll tell you. I'll answer your question. So now I meet a client. I've pre-approved them for 700,000. They know the max that they will qualify for. Now, if they buy something for 500,000 and need 150 for repairs, they're pre-approved for 700, right? So the total amount is there. Did you get it?
So then you can pre-approve somebody for a 403 without having the house. You can
Yes, yes, absolutely. Yes.
Okay.
Yes.
Okay.
Yes. 100%. Yes.
Okay.
Now we just need to pre-approve them and have a conversation with them if they have the appetite for a 2 or 3K loan. Hey, not everybody does. It's like having a second job.
Okay, gotcha. Thank you.
So I have another question. What if they sign the contracts, they put down the deposit, and then the appraiser comes and then they need more money? Do they forfeit their deposit?
What do you mean appraiser?
Well, when they have to come to give the estimate on how much the repairs are gonna cost.
Oh, no, you should get an idea of the estimates before. We don't want to get out of attorney review and then have our clients stuck in a deal when, they're having challenges with the contractor and the repair amount and qualifications based on that.
So have someone come, a contractor come before the contracts are signed. You can put
Yes,
in the
guys,
offer.
we should have a contractor, a go-to person who's going to be a part of this team for the 2 or 3K. We're giving them business, so we should have somebody and say, hey, listen, come and give us an estimate, please.
I have one other question. Does electric, gas, and water need to be turned on before the contractor can come? Because a lot of these houses, they're not.
Yeah. No, not really. No, it doesn't have to be. However, guys, coming to that point that she just made, when it's a bank-owned property, and let's say the condition of the house is fine, but the utilities are not turned on, the bank will require for utilities to be turned on prior to closing. No matter what, we want to make sure, because we cannot lend on a property without that, because after closing, the buyer can come and sue us and say, how you gave us the money, and now we have this problem. So we want to make sure it is turned on and running. Any other question? Listen, guys, thank you for being on video. You asked great questions. You guys paid attention, and I'm so grateful for that. But as you go along, you may have other questions. But I am good at returning calls and texts and all that good stuff. I know you guys send me some. Mary, can I have like a copy of those emails? I want that chat, because people who send that email, I want to reach out to them in the chat. And
I believe I can do that.
Okay, if you can give me just whoever
I don't
put
know how to
their
do it, I will
email,
ask
I
them.
just want their email addresses so I can reach out to them.
Okay.
Yeah.
Chitel, thank you again, as always, very informative. And we will have the recording ready for you, hopefully this afternoon, or if not, then tomorrow morning.
No, thank you to everybody who attended. It was a good attendance.
Yeah.
And thank you for that. And any questions, you can always text me or call me or email me, whatever you prefer.
Great. All right. Thank you so much, everyone. And have a wonderful day. And we'll see you next time.
Bye, everyone.
Bye-bye.
Thank you.
Bye.
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 Bye.